What is going on, guys? We're back to Secrets to Day Trading with Mr. Banks. Episode 4 is now in the books. Welcome back, everybody. Hope you guys have enjoyed this series so far. If you're new, we try to drop a video every single day of the trading week. So 5 videos every single week so that you guys can get educated and become better traders. So I want to give a quick shout out to the group today. We absolutely killed it on this Friday. Team member almost hitting 11,000, 2,200, 800, 855%. Absolutely running it up today. So big shout out to the group. But you guys came here to learn. So let's get started. Now, today, if you guys watched my video yesterday, what did I talk about? Fridays, a lot of people get bagged, right? A lot of you get bagged. And I saw on social media today that there was a majority of people that lost quite a bit today. One thing is Fridays are hard to trade, right? There's a lot of volatility, and today was OPEX, right? So there's a lot of options were expiring. And so that causes the high volatility. It happens every third Friday or before the third Saturday of every month. So pretty much every third Friday. And on top of that, by the time we get to Friday, our brains are fried because we're a computer, right? We're a computer. And when you trade all week, work all week, and especially you work all week and trade all week, your brain is going to be fried. The decision-making process going into that trading is going to become more difficult. So this Friday in particular was more difficult because we had OPEX, right? We had OPEX going on. And then obviously it was Friday. So be sure to get the journals out. If you guys lost today, definitely journal why. Are you FOMOing? Just taking late entries. Make sure that you are journaling. So today was pretty much a slow melt up until the end of the day, right? We had a nice slow melt up. Kept flagging out. But what was one thing that we could have done, right? What was one thing that we could have done? Well, risk light, right? Risk light. When we get to Fridays, like I say, we should only be trading with profits on Fridays. And if you weren't profitable, if you're not in profits by Friday, please don't trade Fridays. Wait till the next week, recoup, go over the week, see what you did wrong, get some rest, over the weekend, and then come back strong Monday to start the week over, right, guys? So if you are going into Friday and you are not profitable, now I don't mean that you're profitable Tuesday, maybe you lost Wednesday, profitable Thursday. I just mean overall, if you are not profitable overall by Friday, please just take Friday off, right? Please just take Friday off. You're probably going to revenge trade. Fridays are already hard enough as themselves, right? And then your brain is already fried from working all week. And if you're not working all week, you've been trading all week as well. So please only play with profits on Friday. And if you are playing with profits on Friday, don't go too heavy, right? Don't go too heavy. Just risk light. I mean, guys, if you would have taken one contract and held it to the end of the day, you absolutely smashed it, right? You absolutely smashed it. And then even right here towards the end of the day, I mean, this run up, you would have killed it, right? Even if you risk light, I mean, that's a almost 4 point move. Like you would have absolutely killed it. Even if you risk light, you would have made a good amount of money, even with $500, $200. I mean, I think these went over 100%. Absolutely for zero date. I think for Mondays or even Wednesdays, might probably win 100%, right? So that's $300. That's $200. So there is profits and good profits in risking light. So risk light on Fridays. Now, AEMA was your friend, right? Trend is your friend until it bends. So AEMA, I mean, he's kept flagging out, kept bouncing off. So beginning of the day, once we found that support on this AEMA, we could have ridden that, right? We could have ridden that until the midday, and we had a nice flagged out. And I know a lot of people would have sold here, right? But let's take a step back and let's look at the larger time frames, because if we look at the 30-minute, right? you would have still been holding until literally the end of the day. Once we broke above at the beginning of the day, right? You would have been holding towards the end of the day, and you wouldn't have been caught off sides, right? You wouldn't have been caught offside. So look at the higher time frames, even in intraday trading. You could look at the 1 hour. A lot of people do that just to get kind of like the bigger time frame for the day. And you can even do the 4 hour. But for staying in a trade, especially if you're trying to ride this AEMA as a trend, I wouldn't go more than the 30-minute. The 30-minute is pretty my top, right? Is my top like larger time frame for intraday trading. It shows me enough on a bigger time frame, on the bigger scale, the bigger picture, right? The 30-minute will show you the bigger picture well enough. So take a look at that, zoom out. Another thing I want to talk about today. Sorry, guys, I'm a little bit tired. It's Friday. I worked out today, pretty tired. But another thing I want to talk about, so sorry if I'm not as enthusiastic as usual. But another thing I want to talk about is these gaps, right? Volume profile, right? I know I get a lot of questions like, how do you use the volume profile? How do you use it? How you use the volume profile is these are showing you where the most volume is happening. Now, it's not showing you buy or sell volume, but it is showing you the amount of volume that's happening at that certain level. So today. Oh, another thing is this POC line, right? This POC line right here, you'll see it on your volume profiles. That is called the point of control. And that is where the most volume is happening. And you can actually use that as a pivot level, right? As a pivot level. So point of control, this line, when you have this volume profile up, we have this POC line. It's called the point of control. It's where the most volume happens. So what do you think? If we're on that level, if we're writing it as support and that's where the most volume is happening, what is that showing you? Right? What is that showing you? That's showing you that there is demand there, right? Showing you that there's a lot of demand here. Because this isn't showing you buys or sells, but it's showing you the highest amount of volume. So if we're finding this highest amount of volume as support, what do you think the type of volume is coming in there, right? Buys, right? Demand. And likewise, if we're underneath it and we can't get above it and we keep rejecting it, what do you think the type of volume is happening here, right? It's going to be sell volume. And we could take puts. But today, we came up and we found it literally as support. So we had two confluences today, right? We had this point of control. We found a support. We also had this AEMA. We found a support. So beginning of the day, we could have taken calls right here. That was a good risk to reward ratio, right? A good risk to reward ratio. And another thing is that we didn't sell off, right? We didn't even come close to this major level that I talked about yesterday that we bounced off of. We created a higher low, right? If we're creating higher lows, that is bullish, right? We're creating higher lows. It is also finding a support, right? This is a major, right? This was a major resistance line, and in turn, it flipped and turned into support, right? So as you guys know, SR flips. So you ever see SR flips? They're talking about support and resistance flips, which happens all day, every day, forever on every single stock, support and resistance flips. It's up to you to actually find them and understand where these flips happen. But as you guys can see right here, right? Double top, nice rejection, rejection. And as you guys can see, this was a major level. So we found this as support. And you already know what I'm going to say with this. Breakout and retest. Good job, guys. Breakout and retest, right? I mean, you guys can see it right here again. Talked about this on the video yesterday, the breakout and the retest, right? So finding this as a major resistance, we broke out of it. We came back down and we retested it, right? Came back down and retested it. And what happened there? Found it as support. So this was another indication in Confluence that we're probably going to head higher. The risk to reward is going to be in calls at this level. It is also at a level of this volume profile. And as you guys can see right here, the volume starts dropping off. So we're finding where volume is coming in, finding it as support on a breakout retest, right? So resistance broke out. We retested, came back down and retested it. Boom. Now we're finding that as support, right? We're creating a higher low. We're finding this as support on the breakout retest. It's also not dropping below this volume profile, right? So you can kind of use these as levels as well. So we're not dropping below. We're finding it as support, breakout retest. And then once we break above the 8 EMA, it's going to be a little bit safer, right? So we're breaking above the 8 EMA. And then we broke above and found support on the point of control, right? The POC line. So what is happening right here? What is happening right here? Breakout retest. On that retest of the breakout, we find it as support. So there's one. This volume profile, right? This volume profile, what is happening there? We're also finding this as support. As you could see, this would be, if we didn't find this as support, we would definitely drop down. But we're creating a higher low and finding this as support. So breakout retest is supporting on a good level, right? So there's one. We're creating a higher low, right? So there's two. And then now what's happening right here? We broke above the 8 EMA, finding as support. There's three. And where do we find this as support as well? The point of control where the highest volume is happening. Now there is four confluences in this trade, right? So there's, I don't know why I put it like that. What's up, guys? There is four confluences in this trade that where you could have taken calls, right? There's four things telling you, all right, this is a good risk to reward ratio to take calls. And now let's say you take calls, we go a couple points up, and then now you're selling at 20%, you're selling at 10%. I highly suggest 20 to 40%. But now you're grabbing, your majority out, right? Your majority out right here. And now you're in runners. So even if you sold on this false breakdown right here, I mean, you would have been in runners, right? And that's another thing. Once we sell out of our major position and we're in runners, it's kind of like a safety net, right? So say this even broke down, but we bought calls right here. So one thing you could have done is, I know we broke the trend, right? We broke the trend right here. But right here, especially if you took calls right here, we should have been in runners by this point. And if we're in runners by this point, there is no real need to sell right here, right? I know the trend is broken, but there really is no need to sell if we're in runners at this point, right? Because we could literally come all the way back down, to even this, to 390 again, right? We had more room to come back down to hold our runners, right? We're not going to lose money if it comes down all the way to here, because we bought calls right here, right? We bought calls at 389.50. So we could have even held them to 390.50, right? We could have held this position, even though the trend broke, we could have held our runners down, right? Because we would still be in profits. And even if you broke even, say you think it's going to head higher and we broke the trend, you could even have your runners be at break even, right? Because you took the majority of the trade right here and now you're in runners. And you can hold them until even break even. And that allows you to catch the bigger move, right? To catch the bigger move. And say you're in runners and you did that, and now you caught the move all the way to the end of the day, and you would have killed it. You would have had an amazing Friday. So just recap real quick. What happened today? Well, we had a breakout retest on the support, right? Breakout retest, found it as support again on the volume profile, as well as the breakout level. We broke above the 8 EMA, found it as support. We broke above the point of control, found it as support, so there's all these things that are showing you to take calls. And now with the runners, right, we're out of majority position right here. We can hold the runners to a break-even position to catch the bigger move. or even say 5% or 3%. So you at least get a little bit of profits on the runners. We can hold them, even though the trend is broken, we can hold them so that we can catch the bigger move. Hope you guys enjoyed this. If you enjoyed it, definitely drop a like, subscribe, drop some comments in the chat, guys. If you guys are enjoying this, let me know. Hope everyone has a good weekend.